Welcome back, everyone, to the deep dive. Today we're tackling something pretty interesting, I think.
Oh, yeah.
Yeah, the philosophy behind systematic and quantitative trading.
Oh.
So it's not just about building a system that works. It's understanding the human side of it too, which I think is super fascinating.
Absolutely.
We're diving deep today into some summaries from a Thai language course.
Oh, wow.
On systematic trading.
Interesting.
And trust me, the insights in here are universal.
Okay.
So are you ready to kind of explore how knowing yourself as a trader and your system can really make all the difference?
Yeah, I mean, self-awareness in this field is key.
Absolutely.
You can't just rely on numbers.
Right.
You have to understand how you react to those numbers.
And how you react to the market, right?
Exactly.
Okay, so principle number 1 from this course is no code, no test, no trades. Pretty simple, right?
Straightforward.
But so powerful. If you can't actually code your strategy and then backtest it, don't even think about live trading.
I see.
And this isn't about, being like a coding whiz.
Right.
It's about being super specific about every single little detail of your strategy. Entry points, exits, how you manage your risk. Everything needs to be crystal clear in that code.
It removes ambiguity, which is crucial for backtesting.
Yes, exactly.
When you simulate your strategy on historical data to see how it would have performed.
Right. And the course actually shared a story about this student who tried to manually adjust his risk management during live trading instead of coding and backtesting those changes first.
Oh, recipe for disaster.
Yikes.
Emotions run high when you're trading, and without a predefined tested system, you're essentially flying blind.
Yeah, and this actually even ties back into, knowing yourself as a trader.
Right.
Because if you're someone who tends to get really emotional during trading, you need a system that takes that emotion out of the equation. The course instructor was a big fan of at least partial automation.
Yeah.
Even if it's just, scanning for signals or sending alerts.
Makes sense.
Anything to help you stay disciplined.
Keep you organized.
Yeah, and they even talked about building a trading platform to kind of help with this stuff.
Having a platform can be a powerful tool in staying objective.
Totally. Okay, so moving on to the next principle.
Okay.
Invest in favorable markets.
I like that.
Right. Imagine you're a surfer.
Okay.
You don't just paddle out in any conditions.
Right.
You wait for that perfect wave.
Of course.
It's the same thing with trading, Yeah. This is all about recognizing market regimes.
Okay.
And how those regimes, really dictate which strategies are going to work best.
Makes sense.
At any given time. And this is where quantitative traders can have a serious leg up.
Oh, yeah.
Yeah, because unlike, funds that are kind of pressured to stay fully invested all the time.
Right. Always got to be doing something.
Exactly. Quantitative traders can just wait patiently
Yeah.
for the ideal conditions to deploy their capital.
Interesting.
And there's this amazing story in the course about this student
Okay.
who actually used market analysis from the course to avoid a major downturn.
Wow.
He said the course literally saved him and his family.
Powerful stuff.
Isn't that something?
Yeah. Highlights the importance of knowing when to sit on the sidelines.
Right?
When things are just not looking good.
Totally.
Preserving capital is just as important as making it.
So true. And the course goes into a bunch of different ways to analyze the market.
Oh, like what?
Everything from simple filters to more in-depth classification systems.
Interesting.
And they even touch on the idea of creating a custom index.
A custom index.
Yeah, tailored to your specific strategy.
Wow, that's a lot of flexibility.
I know, right?
Mm-hmm.
So much to unpack there.
Yeah, for sure.
All right, so this next principle really resonated with me.
Okay, let's hear it.
Know your system, know yourself.
I like that.
You could have the best trading strategy in the world.
Yeah.
But if it doesn't match your personality,
Right?
your risk tolerance, how much time you can actually dedicate to trading,
Mm-hmm.
it's just not going to work.
It's not a one-size-fits-all kind of thing.
Exactly.
Yeah.
And the instructor actually said it took him 3 years
Oh, wow.
to discover that he prefers intermediate-term trading.
That's a long time
I know.
to figure that out.
It's a journey.
Definitely.
And here's something I never really thought about before.
What's that?
Backtesting your psychological response to your system.
Oh, interesting.
Yeah. Can you actually handle those drawdowns?
Yeah.
Will you stick to the rules when things get emotional?
That's often overlooked.
Totally.
But it's so important.
Because a system can look phenomenal on paper.
Right.
But if it makes you panic and break your rules when you're actually trading live money,
It's not going to work.
it's not going to work at all, right?
Well,
And they actually recommended checking out that book.
which one?
Market Wizards by Jack Schwager.
Oh, yeah.
Have you read that one?
I have. Yeah, it's great.
It's so good.
Really interesting to see how all these different successful traders approach the market.
It shows you that there's no one right way to do it.
Exactly. There's no magic formula.
Right.
It's about finding what works for you.
Totally. And speaking of finding what works, this next principle is one I try to live by.
Okay.
Admire simplicity. Despise complexity.
Oh, I like that.
It's about avoiding overfitting.
Ah, yes.
Where you create a system that's so complex that it only works on the exact data you use to create it.
Classic pitfall for new traders.
Oh, yeah.
Trying to account for every possible scenario.
Right.
And it just makes the system brittle and prone to failure.
And the course instructor was very blunt about this one.
Oh, yeah. What'd they say?
He said, if you can't code a trading rule, don't bother using it.
Got it.
If you can't backtest it, don't trade it.
Simple but powerful advice.
I know, right?
Yeah.
Keep it simple.
Keep it simple.
And instead of trying to cram everything into one super complex system, they recommended keeping different systems for different market regimes.
That makes sense.
Right.
Yeah. You avoid that trap of constantly tweaking, trying to make one system fit every situation.
Exactly. Okay, so on to another principle.
Okay.
This one's all about accepting reality. Market fluctuation and system drawdown are inevitable.
Facts.
It's a nice little reminder that you're not going to win all the time.
You're going to have losing streaks.
Yeah.
It's part of the game.
Volatility, drawdowns, part of the game.
Just the nature of markets.
And they even share this funny anecdote about Jamie Dimon.
Okay.
You know, the CEO of JP Morgan Chase?
Yeah, I know him.
He basically states the obvious. He's like, the markets will fluctuate.
Well, he's not wrong.
No, he's not wrong, but it's funny because it's like, no duh.
It's true, though. A lot of people forget that.
Right.
When they're in the thick of it.
Yeah, when they're losing money.
And it's like, oh my God, the market's against me.
Yeah, exactly.
It's just doing what it does.
Right. And the key here is to have confidence in your system.
Makes sense.
Which comes from thorough backtesting and understanding market history.
Yeah, and that confidence helps you ride out those inevitable downturns.
Totally.
Knowing that they're just temporary setbacks.
Exactly. And the course also really emphasized preparing yourself.
Oh, okay.
Mentally and financially.
Yeah.
For those inevitable drawdowns.
So it's not just hoping for the best.
No.
It's having a plan in place.
Exactly. Because if you know they're coming, you can handle your emotions better and make more rational decisions.
Absolutely. It's like anything else in life.
Right.
You plan for the worst, hope for the best.
Yeah. And you know what they say?
What's that?
Failing to plan is planning to fail.
That's true.
So true.
Words to live by.
All right. Well, that covers a lot of ground.
We got through a lot of principles there.
Yeah. And I think we should probably take a break.
Yeah, that's okay.
Before we dive into the next batch.
All right, let's do it.
Cool.
Okay.
We'll be right back.
Sounds good.
After a quick break.
All right.
Okay, so we're back and ready to dive into more of these principles.
All right, let's do it.
This next one is all about mindset.
Mindset. Okay.
No greed, no fear, think probability.
Interesting.
So systematic trading is about probabilities, not your emotions.
Detached and analytical, right?
Exactly. You can't let greed or fear drive your decisions.
Absolutely.
You got to stay objective. The course had this really cool visual.
Oh, yeah.
Yeah, a spinning triangle that changed color.
Okay.
From green to red as the market regime shifted.
Interesting. So visually representing how the probabilities change over time.
Yes. Exactly.
Yeah, what's working now might not work tomorrow.
Right, and you can't get fixated on the present.
Yeah, you can't let a winning streak make you think it'll last forever.
Exactly, and just because you're in a drawdown doesn't mean your system's broken.
It's all about trusting the process.
Exactly.
Sticking to the system.
Even when it's tempting to deviate.
Yeah, when you see everyone else making money doing something else.
Right.
It's tough.
It's so tough.
But that's where discipline comes in.
Yeah, and they really hammered this point home in the course.
What they say?
Violating your rules, even if it feels justified in the moment.
Right.
It'll hurt you in the long run.
Discipline is key.
Non-negotiable.
Right. Yeah. Without it, you're just gambling.
Totally. Which brings us to a related principle, I guess.
Okay.
Trade your system, not your opinions.
I like that.
So it's about sticking to your plan, even when you hear conflicting opinions.
Where you see a news headline that makes you doubt yourself.
Yes. Or everyone on Twitter is saying the opposite.
Right.
All the time.
Yeah, you got to trust the system you build.
Exactly. You backtested it. You know it works.
Don't let the noise distract you.
There's actually a story in the course about the student.
Oh, yeah?
Yeah, who almost missed a profitable trade because he started listening to some financial news commentary.
Oh, no.
That, like, contradicted his system signals.
Classic example of getting swayed by outside noise.
Yeah. So easy to do.
Especially when it's coming from someone who sounds confident.
Right.
Like, they know what they're talking about.
Totally. So they also cautioned against, like, blindly following so-called experts.
Especially the ones without a proven track record.
Especially those.
Yeah, easy to get caught up in, like, predictions and hype.
But you gotta trust your system.
The research you've done, the analysis.
Yeah. Okay, last principle for this batch.
Okay.
Always identify and quantify your risk.
Sounds pretty basic.
I know, right?
But important.
So important. But you'd be surprised how many people avoid it.
Yeah. I think people don't like thinking about the downside.
It's scary.
Yeah.
But it's essential.
Risk management is everything.
Right, and it starts with being specific.
You can't just have a vague sense of like, oh, I'm comfortable with this much risk.
Right, you got to quantify it.
Put a number on it.
Exactly. They had a great example in the course.
What was that?
Like figuring out your maximum portfolio drawdown tolerance.
Okay, yeah.
Based on like how quickly you can replenish your funds.
So tailoring it to your specific financial situation.
Yeah. And not just like having a general idea.
Mm-hmm.
You need to calculate it.
Like actual dollars and percentages.
Exactly. So you can actually assess the impact of your trades.
And adjust your position sizes.
Right. Like if a trade has the potential to wipe out half your account.
Yeah, you probably shouldn't be taking it.
Probably not a good idea.
Unless you've got a really, really high risk tolerance.
Right. Or you're like a billionaire who doesn't care.
Yeah, in that case, go for it.
So that's 8 principles that go way beyond just the technical
The psychology of trading.
Yeah, the mindset you need to succeed.
It's so important.
What are your key takeaways so far? Like, what's really sticking with you?
I think the thing that's really resonating with me is that market fluctuations are both a constant and a change.
Oh, that's interesting.
It's a bit of a paradox, but it really highlights the dynamic nature of markets.
Right.
Like you need a system, but you also got to be flexible.
Yeah, adaptable.
Yeah, it's almost like the market is a living thing.
I love that analogy.
It's got its own rhythms and cycles.
You can't predict it 100%.
Nope, and that leads to a crucial question.
Ooh, what's the question?
How can traders use this understanding to their advantage?
Ah, the million-dollar question.
Exactly. And that's where I think the concept of time arbitrage comes in.
Time arbitrage. Okay, I like where this is going.
So think about it. Most investors, especially those managing big funds,
Yeah.
they feel this pressure to always be in the market.
Right. They got to be doing something.
Buying or selling even when the conditions aren't ideal.
They're afraid to miss out.
Exactly.
Yeah.
FOMO is a powerful force.
Plus, they need to show their clients they're, like, doing something.
Right. Justify those fees.
Exactly.
So they end up playing this short-term game.
Reacting to every headline.
Every little market swing.
Yeah, but quantitative traders with their systems and their back-tested data, they can play a different game.
They can be patient.
They can wait.
For the perfect setup.
That their system has shown.
Is most likely to be profitable.
They don't have to chase every opportunity.
They let the market come to them.
Which is so powerful.
It's a totally different way of thinking about the markets.
It really is.
And it circles back to those core principles.
Yeah.
Knowing your system, understanding market regimes.
And controlling your emotions. So you need the discipline to wait.
And the confidence to not chase every little move.
It's about playing the long game.
Exactly. Thinking long term.
Okay, so we've talked a lot about like the mindset and the psychology.
Yeah, the mental side of trading.
But let's shift gears a bit.
Okay.
And talk about market analysis.
Ah, yes. The actual mechanics of understanding the market.
It seems like every principle we've discussed.
Yeah. From knowing when to invest to managing your emotions.
Comes down to having a good grasp of how markets actually behave.
You can't build a successful trading strategy without understanding market dynamics.
And the course discussed a bunch of different approaches.
Like what?
Everything from like simple filters
to
more complex classification systems.
By different levels of analysis.
Filters are a good starting point, but...
They can only tell you so much.
Right. They might tell you a stock is trending up.
Yeah, but they don't give you the full picture.
No context.
No context.
But classification systems go deeper.
They try to categorize market behavior into different regimes.
Like bull markets, bear markets.
Sideways markets.
So you're not just looking at if a stock's going up or down.
They're trying to understand what's driving those movements.
The bigger forces at play.
Yeah, and that's how you figure out which trading strategies are going to be most effective.
in a given environment.
Exactly. Like a trend-following system might work great in a strong bull market.
But struggle in a choppy market.
Right. So it's not just knowing how to use the system.
It's knowing when to use it.
Aligning it with what the market's actually doing.
It's all connected.
It all ties together.
And then there's the idea of creating a custom index.
Oh, yeah. That was an interesting concept.
I thought it was so cool.
It's about going beyond those broad market indices like the S&P 500.
Yeah, creating a tailored view.
That's specific to your trading interests.
So instead of looking at the entire stock market, you could build an index that tracks just tech stocks.
Or small cap companies.
Right, and then use that custom index as a filter.
Or an input for your trading system.
So powerful.
Yeah, you're essentially creating a benchmark that's tailored to your strategy.
It's like you're building your own little world.
In a way, yeah.
Focused on exactly what you're interested in.
Filtering out all the noise.
Okay, so we've talked about market analysis.
A lot to unpack there.
But the course kept coming back to the importance of backtesting.
Yeah, backtesting, yeah.
It seems like every principle relies on it in some way.
It's essential.
It really is.
Think of it like a dress rehearsal.
Okay.
For your trading system.
I like that.
You're testing it out on historical data.
To see how it would perform.
Exactly. You want to see how it would handle different market conditions.
Make sure it's robust.
Identify any weaknesses or problems before you risk real money.
Right. And don't forget about backtesting your emotional response.
Oh, yeah. That's crucial.
A system might look amazing in a backtest.
Right.
But if it makes you panic and break your rules when you're actually trading,
it's not going to work for you.
Totally useless.
You need a system you can actually stick with.
Even when things get tough.
Backtesting your psychological response can help you identify those potential problems.
And come up with ways to manage your emotions.
Right. It's not just about proving that your trading rules work.
It's about proving that you can follow them.
Consistently.
The course even shared a story about a student who had a system that looked amazing in backtests.
Okay.
But when he started trading it live,
yeah,
he found himself constantly doubting his decisions.
Second-guessing himself.
Yeah, and making emotional trades.
Oh, it happens more often than you think.
Trading is such a mental game.
It really is.
So backtesting is like training for the mental side of trading.
Building that discipline.
And confidence.
That you need to succeed.
Okay, so we've covered market analysis and backtesting.
Two of the pillars of systematic trading.
What? There's one last thing I want to touch on.
Okay, what's that?
What happens when your perfectly backtested system encounters something completely unexpected?
Ah, the black swan event.
Exactly. This is where the course introduced this concept that really resonated with me.
I'm intrigued. Tell me more.
Knowing when to fold them.
Knowing when to walk away.
Sometimes the best move is to step away from the table.
Even if you think you have a winning hand.
It's about recognizing that no system is perfect.
Right, no matter how well designed.
There will be times when things just don't go according to plan.
The market's going to throw you curveballs.
And in those situations, you gotta have the discipline.
And the self-awareness.
To step back and reassess.
Don't be afraid to take a break.
Protect your capital.
Live to trade another day.
Sometimes the bravest move is to walk away.
Couldn't agree more.
So as we wrap up this deep dive into the philosophy behind systematic and quantitative trading,
it's been quite a journey.
I want to leave you with this final thought.
Okay.
It's not just about building a sophisticated trading system. It's about knowing yourself as a trader, understanding the markets.
And having the wisdom to know when to step back.
Exactly.
It's a continuous process of learning and adaptation.
Thanks for joining us on this deep dive.
It's been a pleasure.
We hope you found it insightful.
Lots of great takeaways.
Until next time, happy trading and keep diving deep.
See you next time.
Helps you avoid blowing up your account.
Yeah, see if you can handle those different market conditions.
Exactly, and make sure it's like robust enough to survive the real world.
Exactly.
But don't forget about backtesting your emotional response.
Oh, yeah.
So a system might look great in a backtest.
Right. On paper, it's perfect.
But if it makes you panic and break your rules when you're actually trading live,
it's not going to work.
It's not going to work for you.
You need a system that you can actually stick with.
Exactly, one that you're comfortable with.
Yeah, even when things get tough.
Yeah, and backtesting your psychological response can help you identify those problems before they happen.
Yeah, come up with ways to manage your emotions.
Exactly. It's not just about proving that your trading rules work,
Right. It's about proving that you can follow them.
Yeah.
Consistently.
And the course actually shared a story about this student who had a system that looked amazing in backtests.
Okay.
But when he started trading it live, he just found himself constantly doubting his decisions.
Second guessing every trade.
Yeah.
Letting emotions take over.
And making emotional trades.
Yeah, the common trap.
So tough.
Trading is a mental game as much as it is anything else.
Totally. So backtesting is like training for the mental side of trading.
Yeah, building that discipline and confidence.
Okay, so we've covered market analysis, backtesting.
Two of the most important parts of systematic trading.
But there's one last thing I want to touch on.
Okay, what's that?
What happens when your perfectly backtested system encounters like a totally unexpected event?
The black swan.
Exactly. The black swan event.
Yeah, those unforeseen circumstances.
This is where the course introduced this concept that really resonated with me.
I'm listening.
Knowing when to fold them.
Knowing when to walk away.
Sometimes the best move is just step away from the table.
Even if you think you have a winning hand.
Yeah, recognizing that no system is perfect.
Right. No matter how much backtesting you do.
You can't predict everything.
Nope.
The market's always going to throw you curveballs.
And in those situations, you got to have the discipline to step back and reassess.
Sometimes the bravest move is to just walk away.
Absolutely.
So as we wrap up this deep dive into the philosophy behind systematic and quantitative trading.
Yeah, it's been a fascinating conversation.
I want to leave you with this final thought.
Okay, shoot.
It's not just about building a sophisticated trading system.
Right.
It's about knowing yourself as a trader.
Understanding the markets.
Understanding the markets.
And having the wisdom to know when to step back.
Exactly. It's a journey of continuous learning and adaptation.
Couldn't have said it better myself.
Well, hey, thanks for joining us on this deep dive.
It's been a pleasure.
Hope you found it insightful, and until next time.
Happy trading, everyone.
Happy trading, and keep diving deep.